Do you think Tesla stock is overpriced or underpriced? This remains to be an unanswered question among Tesla followers, whether fans or critics. Make sure to stay tuned and keep watching to find out what an expert thinks about this. Whether Tesla stock is overvalued or undervalued remains to be a subject for debate, and experts have their own reasons for their belief. Arguably, Tesla has been thriving today, despite numerous problems it encountered. However, from critics' perspective, Tesla has not been doing enough to get back up from the slump. So to speak, it had been in since the COVID-19 pandemic that brought about numerous issues on the production front. In today's video, you will see why an expert reveals that Tesla stock is greatly underpriced. My expectation for the future is that in 10 years, people will look back at these prices for Tesla with a market cap under $1 trillion and say, "Wow, what a great buying opportunity it was back then," says James Stevenson. James Stevenson is a YouTube content creator whose channel mainly caters to Tesla stock content. Stevenson is a Tesla owner and investor who creates in-depth analyses, forecasts, charts, and occasional memes. Notably, Stevenson's pinned tweet is a quote retweet from Musk saying, "James," to which Stevenson playfully captioned with, "Hey, Elon Musk, who's your favorite retail Tesla analyst?" The Tesla CEO Elon Musk, who is known to reply to and engage with his Twitter followers, replied to Stevenson and said that he's pretty great. It was pretty cool. I have been extremely fortunate over the years to have received a bunch of replies from Elon for no good reason that I can tell. I've never met him. He just interacts with strangers on Twitter a lot," shared Stevenson. In a recent YouTube video with another content creator who refers to himself as Tesla Herbert, Herbert said that Stevenson is not simply making comments, but he believes that James is one of the few who presents very detailed reports, analyses, estimates, and forecasts. Herbert said, "You really do a good job of doing that." Herbert is the host of Brighter Podcast, a channel covering all things Tesla, SpaceX, The Boring Company, and Neuralink, among others. The Stevenson indicator, which was surprisingly named playfully, is a chart that presents the present and previous Tesla stock data on which Stevenson bases his analysis and forecasts. However, both creators Herbert and Stevenson emphasize that this indicator is in no way financial advice. In fact, Herbert said, "It's a bit of a fun. It's not something people necessarily have to take seriously. It's just one more metric, but it's a cool thing that you discovered, and people can kind of take it for what it is." Herbert believes that in the Stevenson indicator, Stevenson himself looked at previous years and noticed that the stock wallet goes up and down, and noticed that there is a general trend line where it kind of follows along quite nicely. Hence, Stevenson showed a trend line over time with bar graphs at the top of it, which are the stock prices as the dates go along. And the Stevenson indicator shows that in the last several years, Tesla's stock price is actually overpriced, but recently it is underpriced. Do you think Tesla stock is overpriced or underpriced? Share your thoughts in the comment section below. Stevenson shared that when a Twitter user jokingly suggested trademarking the analysis chart as Stevenson indicator, which he originally thought was hilarious, he said that the first time he pointed it out, he said, "Hey, there's this technical analysis support line which is just a dumb linear function. That analysis showed the lowest price at which Tesla has closed since 2019 and that it happened on March 18, 2020. He explained that it was a $72.24 split adjusted in late August 2020 when Tesla split 5 for 1, so it was more like $361. Stevenson said that at today's price it was $72.24 and said, "I have to say that really fast because Tesla is about to split again 3 for 1 next week, which I have already reflected in my forecast model." Stevenson explained that if you take that day's closing price of $72.24 and add $1.69 to the stock per trading day, you get the line that you see first when you look at the chart, which is the diagonal line. He said that the coolest part about this chart is that the diagonal line does not exist and that there is no doubt in the line drawn on this record, all of the lines on this chart are either horizontal or vertical, right? So all those vertical white lines show the distance between that day's actual closing stock price and Stevenson indicator. He added that the line function shows every day how far above or how far below a Stevenson indicator did Tesla's stock close. That said, during the epic bull market that lasted in 2020 and all of 2021, for most of the time, this support line or function acted as support for Tesla's stock. Stevenson said that if you look back at it and then this year 2022, there has been a pretty big bear market the whole year. Tesla has mostly traded below according to the indicator, but has started trending back up recently. One of the questions I get about this is this a joke? Yes, it's a joke. Stevenson indicator, like all technical analysis, should not exactly be trusted for anything. It's only showing you what has happened. It has no guarantee of future results, says Stevenson. And this is not trading advice, and we're not providing financial advice. This is for entertainment purposes only, he added. Although Herbert understands that this is not to be taken seriously because of the made-up numbers, an imaginary line kind of thing, in his words, he thinks that it is important to actually visualize the notion that Tesla is spitting out earnings and that they're growing significantly per quarter, and yet the stock price is not following with that growth. To which Stevenson said, either it will go up or it will be good news for people who have money. They want to invest in Tesla stock because they'll be able to buy more shares for their money. He said that eventually the price has to catch up, or else the PE will get right for a company that's growing earnings that quickly keep doubling each year. Peter Lynch, an American investor, mutual fund manager, and philanthropist, said that the PE can be high and that it is still a good deal if the earnings growth rate is also high. And if the risk achieving those earnings is low, then you should be okay paying a higher PE for a stock that has much higher growth and future earnings potential than others. Overall, Herbert said that what the Stevenson indicator shows is that for many years, Tesla's stock price is actually overpriced. Rightly so, because of future perspective looking at the future growth. However, recently, it appears that the company's stock is way underpriced. My expectation for the future is that in 10 years, people will look back at these prices for Tesla with a market cap under $1 trillion and say, wow, what a great buying opportunity it was back then, says James Stevenson. Since Tesla went public in 2010, its shares have ballooned more than 20,000%, comfortably outpacing the market as a whole, consistently obliterating Wall Street expectations, and turning early investors into millionaires. To say that pace of growth is out of the ordinary would be an understatement. That said, there is no denying that Tesla's stock is on a roll. Despite all of the potential upsides, many experts argue that the frenzy surrounding Tesla is nothing more than a bubble that will burst sooner or later. In fact, despite production hiccups, Tesla is now gearing up to produce more vehicles with the help of the newly opened gigafactories in Austin and Berlin. Investors and analysts have reason to believe that Tesla's production capacity will grow substantially as the said new manufacturing plants get up and running. Moreover, many think that demand for Tesla's cars will keep growing, especially in China, where the EV maker has already done exceptionally well. Tesla also benefits from a general euphoria around EV stocks as tightening emissions regulations around the world paint an increasingly clear picture of a future auto industry dominated by zero and low emissions vehicles. It has continued to cement its position as the dominant force in an EV market that's poised to grow considerably in the near future. For more Tesla stock content, visit our channel and watch our other videos.